I just want to focus a little bit on what's going on in the precious metals market. And if you remember, when I did the podcast last Friday, I really was urging people to immediately buy over the weekend to take advantage of the 24/7 capabilities at Schiff Gold and buy some gold and silver, particularly silver. I mean, I've been hammering, pounding the table on silver all year because of how cheap it was. And the markets gapped up quite a bit on Monday, maybe $40 higher on gold, $1 higher on silver. So if you bought on Friday night, Saturday, Sunday through Schiff Gold, you got a great price, right? Because the market didn't even move until later Sunday night, right? So you had plenty of time. And I'm going to give the same advice this weekend. Buy your gold and silver over the weekend. Don't wait for Monday. We got 2 more days of the quarter, and I think they're going to be big for gold and silver. I think Wall Street now, and I mentioned this last week, now that you got Morgan Stanley is saying we have a 60-20-20 portfolio. You've got Wall Street for the first time in my career. I've been a stockbroker since 1987. I've been in the investing business. And for the first time, I'm not the only one telling people to buy gold and silver. Wall Street is now saying the same thing. And 20% of a portfolio in gold, that's a big percentage. That's not chump change. That's a lot of money that's going to be coming in to gold. Now, not all at once, but pretty much every day for the next several years. I think it's the beginning of a huge wave of money, Wall Street money, that's going to be coming out of bonds and other fixed income into gold and gold-related equities. Because now, Wall Street is not worried about gold prices crashing, which they always were. Now they realize gold's going up, so these gold stocks are a bargain. And what's great about the gold bull market now is what it was missing before. Silver is now leading the way. That is a bullish sign. People always pointed to the weakness of silver as a lack of confirmation because all big gold bull markets, silver leads. Well, now silver is leading. Gold was up 0.5% today. Silver was up 2%. Silver closed over $46. It traded over $46.50. Silver was up 8% on the week. So if you bought silver last weekend, like I told you to in this market wrap, you're already up 8%. Gold was up 2.2% on the week. Year to date, silver's up 59%. 59. In fact, when it was at its peak, it was up 60%. Then it pulled back a bit. Gold is up 43% on the year. And the year's not even over. We got 2 more days left in the third quarter. I think the fourth quarter is going to be the strongest yet for gold and silver. And as I just mentioned, these next 2 days, a lot of portfolio managers are going to want to show their clients that they have some exposure to gold and silver, right? Better late than never. Of course, it's not late, but it's late in the quarter. So I think they're going to, window dress their portfolios. They're going to add some gold exposure if they don't already have it. So you're going to see, I think, money coming in to gold and silver and the mining stocks over the next couple of days. By the way, that was the other knock on the bull market, that it wasn't being confirmed by the mining stocks. They were lagging. They were underperforming because in every gold bull market, the gold stocks lead the metal. Well, that wasn't happening until now. The GDX was up 18% so far this month. 18%. The GDXJ up 20%. Year to date, the GDX is up 120%. More than a double, 120. The GDXJ is up 125%. So the gold stocks are more than double, in fact, triple the return on gold. So not only are they leading, they're way out in front. So we are firing on all cylinders. We have silver outperforming gold, and we have the miners outperforming the metal, right? It's all systems go, and we're just launching off now, right? And I think when silver breaks above 50, which it could easily do next week, I mean, this may be the last week that you could buy silver below 50, because I think once we break through 50, we ain't looking back, right? 50 is going to be support if we even test it. And we're going to go a lot higher than 50. But, we hit 46.5. So we just broke 40 just a few weeks ago. We got above 40 for the first time. And if you remember, what did I say? I said, once we break 40, we will make a beeline for 50. I said, we will get to 50 very quickly, right? And we are. 40 to 50 is happening a lot quicker than 30 to 40. That took a long time to get from 30 to 40. I mean, many, many months. And it just took a few weeks to get from, well, so far we haven't hit We haven't hit 50 yet, but I think we could easily do it next week. And by the way, look at the other precious metals. I mean, palladium, not too shabby, up 44% on the year. Look at platinum. Platinum was up 3.3% today, 12% on the week. That's the entire stock market S&P return for the year. Platinum did it in 1 week. Platinum's up 74% on the year. Now, we don't sell a lot of platinum at Schiff Gold. That's unfortunate. But, I was pounding the table because I wasn't really a big fan of platinum until earlier in the year when I saw how cheap it was. And on my main podcast, when gold was above 3,000 and platinum was still below 1,000, I was like, you got to buy platinum. You got to go to Schiff Gold. You got to buy some platinum because this is ridiculous. And yeah, look at how much it's up. It's still cheap. It's not as dirt cheap as it was, but I still think you're going to see some outperformance in platinum because it has a lot of catching up to do. And the same with silver. That's why I've been recommending so much silver, because it has a lot of catching up to do. And I think it's going to catch up because what's been driving the gold trade is central bankers. They don't buy silver. They don't even buy platinum. They buy gold because the central bankers were ahead of the curve, right? They could read the writing on the wall because they were writing what was on the wall. But now Wall Street is finally waking up to the reality of inflation. 2% inflation is a thing of the past. We're not going back down to 2. In fact, we're not even going to stay at 3. We're going to have high inflation as far as the eye can see.
All right. I want to focus a little bit here on what's happening in the precious metals market, because this is where the real story is, and nobody on Wall Street seems to be paying attention. If you remember my podcast last Friday, I was urging people to buy gold and silver over the weekend. And I wasn't just making that up because I felt like talking about metals. No, I was pounding the table, urging you to take advantage of the fact that Schiff Gold is open 24/7 and you could get your orders in before the markets gapped up. And what happened Monday morning? Exactly what I warned. Gold opened $40 higher, silver opened about $1 higher. If you listened to me and bought Friday night, Saturday, or Sunday, you got a fantastic price. If you didn't, well, you already missed out on some easy gains. But I'm giving you the same advice now. Don't wait for Monday. Buy over the weekend. This isn't the time to sit on your hands and hope Wall Street gives you permission. We've got 2 more days left in the quarter, and I expect those days to be very big for gold and silver. Portfolio managers are going to want to dress up their holdings before reporting to clients, and the easiest way to show they're in touch with reality is to slap some gold and silver onto their balance sheet before the quarter ends. Now, here's the real story. For the first time in my entire career, Wall Street is actually recommending gold. Think about that. I started as a stockbroker in 1987, and for decades, I was the oddball. I was the one guy telling clients, hey, you should probably put 10, maybe 20% of your money into gold and silver. And every time I said it, people would look at me like I had 3 heads. Meanwhile, CNBC would trot out analysts telling you to buy Pets.com, WorldCom, or subprime mortgage-backed securities. And of course, every time those things blew up, I'd remind people, well, if you had listened to me, you'd be sitting pretty with your gold and silver. But now, Morgan Stanley is out there saying the new model portfolio is 60-20-20. That means 20% in bonds, 20% in gold, 60% in equities. That's a huge allocation to gold by Wall Street standards. It's not chump change. That's billions, even trillions of dollars that will eventually flow into metals and miners. Not all at once, but steadily, day after day, year after year, as they rebalance into this new allocation model. And why is Wall Street finally giving in? Because even they can't deny it anymore. Gold isn't crashing. Silver isn't going to zero. These metals are breaking records and outperforming equities. So the street finally decided to stop fighting reality and start riding the wave. I'll tell you right now, this is the beginning of a massive long-term inflow of institutional money into precious metals. And we're catching it right at the ground floor. Now, here's what makes this bull market different from the false starts of the past. Silver is leading. That's right, silver, the so-called poor man's gold, is out in front. And historically, that's how you know the gold bull market is for real. Every major gold bull market has silver outperforming. Silver is more volatile, more thinly traded, and when the mania phase starts, it explodes. For years, the naysayers pointed at silver's weakness and said, "See? Gold's rally can't be trusted because silver isn't confirming." Well, guess what? Silver is confirming now. Just look at the numbers. Gold was up 0.5% today, but silver was up 2%. Gold closed the week up 2.2%, but silver closed up 8%. That's not noise, that's leadership. And year to date, silver is up 59%. At the peak, it was up 60%. Gold is up 43% year to date. And guess what? We're not even done with the year. We still have a whole fourth quarter ahead of us. And I'll tell you right now, the fourth quarter is going to be even stronger. Think about this. If you listened to me last weekend and bought silver, you're already up 8% in 1 week. Where else are you getting those kinds of returns? Tesla? Nvidia? Please. Those stocks are priced for perfection, and one earnings miss away from disaster. Meanwhile, silver is priced like it's still stuck in the 1990s, and it's ripping higher in real time. And here's the kicker. The mining stocks are finally joining the party. This was another knock on the bull market in recent years. Critics said, well, the metals are up, but the miners aren't performing. That means the rally isn't real. Not anymore. The miners are exploding. The GDX is up 18% just this month. The GDXJ is up 20%. Year to date, GDX is up 120%, more than doubling, and GDXJ is up 125%. That means the miners are not just confirming the rally, they're leading it, tripling the return on gold itself. So here we are, silver leading gold, miners leading the metals. Folks, this is what a textbook bull market looks like. We're firing on all cylinders. This is launch mode. And yet, most people are still sitting on the sidelines, waiting for permission from Jim Cramer or the Fed before they act. Let me tell you, by the time those guys give you the green light, the easy money will already be gone. Silver just closed above $46 and traded as high as $46.50. That's up from breaking $40 just a few weeks ago. And I told you then, once silver breaks $40, it'll make a beeline for $50. That's exactly what's happening. It took months to crawl from $30 to $40, but only weeks to blast from $40 to $46. We're probably going to $50 next week. And once silver breaks above $50, that's it. That level becomes support, not resistance. We won't look back. And don't forget the other metals. Palladium is up 44% year to date. Platinum is up 74%. Platinum alone gained 3.3% today, 12% this week. That's the entire S&P 500's yearly return in 1 week. You think people are going to keep ignoring this forever? Of course not. At some point, the herd mentality flips. Right now, they're herding into overvalued tech. But when they finally notice precious metals, they'll stampede in all at once, and prices will go vertical.